is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't take anything personally. Transform your life. When you refuse to take things personally, avoid many upsets in your life. Your feelings of anger, jealousy, and even sadness will simply disappear if you don't take it personally. Market-wise, let's take a look at it out here. We have the Dow Industrials trading down 218, NASDAQ down 145, S&P's down 28. Percentage-wise, what we have out here, folks, is the Dow Industrials down 0.8%, NASDAQ down 1.8, S&P's off 1. Gold contract trading flat, $12.02 an ounce. We have silver down 7 cents, $14.59 an ounce. Light sweet crude down $2. Let's get over and look at that light sweet crude market. That's quite a move. And where is she? So crude's down 2.5%. And that baby, okay, so you're down with 650,000 contracts. You got some movement on the way down. All right, we'll see whether we can get back in the lower range. The lower range out here is quite a way down, but bottom line is that what we've done is, if we take a look at this, this is what's going to be pretty wild. You're going right against the lows of the highs of 2011. That was the $75 number. It's right here, $75.71. And we'll see. That might be it. You know, it was digging into that bar. You got up to 76.90, so we got $2 into that bar. Now what you're going to have is we're going to close under that bar tonight. So that's going to be a decent indication that we just may get relief inside this energy market, which would be a beautiful thing. Because what you did have is that we also had the gasoline market as well as the heating oil market going topside. Now gasoline is down, wholesale gasoline is down 1.5%. At $2.10 a gallon, and we have the heating oil down 1.4% at $2.40 a gallon. So good seeing, especially because between the gas and the heating oil, of course, that's what we use quite a bit. Gold contract flat, $12.02.90. What you do have with gold's still pushing these swing highs, and they had volume behind the move. You know, on Tuesday we did 365,000 contracts. That's when it got to 12.12. Yesterday we got to 12.12. We did 255. Today you're doing 274. Silver. We take a look at the silver market. Silver out here today, you're trading at a price point of $14.60. You're down 0.5%. Silver also has the juice behind the move. Silver is backing down with 73,000. I believe we're going into 104,000. Let's see. Yeah, you're going to 106,000 contracts. So that baby is still setting up for higher price. Now, notes and bonds. Okay, I'm going to put the note and bond market, folks, on a continuous contract. The reason being is that you get a better understanding of how this breakdown is, number one, and number two, what I expect we're going to see from this point on. So you get the 10-year note right now down 8 ticks. You're trading 117.28. We bring this back, and what you're going to see now, the continuous contract is pretty cool. Actually, I'm going to bring it back. a good 20 years, so you can see how this lays out. Because so this move was no doubt fast, okay? You know, we've been delaying at this price point, meaning the price point of just under 3 for 5 months now. 1, 2, 3, 6 months. It is 6 months. So it broke down. It broke. Your next level is laying out at 114. You know, you have some support right where we are. I suspect more than likely we're going to get down to this next level. Now, that's not the end of the world, and this is what you have. When you talk about support, we traded at these levels, meaning the next level down, which is quite a way, by the way. We traded from those levels from January of 08 going all the way over to April of 2010. The highs of those levels are basically right where we already dug into them. It's the highs are about 118. The lows where the big support comes in is about 115. So it looks to me like we're going to move around these levels and more than likely morph down to these levels. We're at 3.19 right now on the 10-year, and that is of course, the high for the year. It's the high since 2011. On the 30-year, right now you're at 3.34. And if we go take a look at the last year, what you're going to see is that 2.6 is the low for the year, 3.3 is the high for the year, 3.37. And we got that yesterday. King dollar. Now, what's really wild here is that King dollar has not got traction with the aspect of bonds yields going higher. We'll see where it shakes out. You know, it certainly hasn't gone down, hasn't gone up. It's been laying there. It does have 24,000 contracts, which is good contract volume. So what you have here is that you have the bulls and bears fighting like crazy for some reason over this number. It's not even, you know, it's in the larger range. I mean, there's no reason that it can't go up there and hit 96,450, which was the high that was generated out here on August 15th. Thus far, it hasn't. That's the bottom line. The indices, the S&P, NASDAQ, Qs, IWM, all have big volume on the way down, folks. We go to the XLE, we take a look at the XLE, that basically failed the whole price. The SPY itself, the volume exploded out of the SPY. And I expect what we're going to see here, I believe, let's take a look at this. We just did when I was just coming on the air, we had just done a 0.382 retracement of the move down this morning. And that was the first decent bounce that we got. Now, if you only can do a 0.382 retracement, that is setting up lower prices coming into the close again. Actually, we did almost a 50% retracement. Okay, so the battle lines are set up here. The battle lines inside the S&P, we're down 28 bucks right now at 29.03. We hit 28.87, which is pretty amazing. Bottom line is that we had a man, Jack Leeson, on this morning. We were talking about it, and if it did break down, that number I believe he had was 28.86 on a break, and that's a fib number on the way down. Stay right there, folks. Come right back. We got our man, Mr. Jason Path. We are going to be growling and prowling, and don't forget, Jason kicks us off every trading day. Morning market kickoff, 8:30 to 9. Stay right there, folks. Jason and I come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials down 222. We get the Nasdaq off 147. S&Ps are off 28. Let's go over to our man, Mr. Jason Path, as we do each and every Thursday at 20 past the first hour. Don't forget, folks, Jason kicks us off every trading day right here at TFNN. Morning market kickoff. He also has an outstanding newsletter. Now, the way you can get this newsletter, you come over to our website at TFNN. You're going to go into, right, you'll see featured content right there. You're going to see the quantitative edge. You can take that for a month, 6 months, a year. All 3 of them come with a 30-day money-back guarantee, folks. Outstanding newsletter. Check it out right at TFNN. What's going on, brother?
Hey, man, how are you?
Well, I guess the market went to Sherwin-Williams, and they've finally bought some red.
Wow, man. I mean, what a day.
Seriously.
What a day. Yeah. And you know, just outside of equities, too. I mean, oil's moving. I mean, it's one we've needed for a few months now. Just everything's rolling, man.
It is
one
rolling.
way or another.
And you know, it's interesting. Of course, the bonds started it yesterday.
Yeah.
And it's like, you know, it's amazing, folks, is that the bond market, bottom line, was going down all day long, and the stock market didn't pay attention to it until the bond market bounced to 230. Then all of a sudden, the S&P sold off. I was watching this. I'm saying to myself, this is amazing. So,
yeah.
You know, I mean, it pays attention to it. Well, it doesn't pay attention to it until it does, right?
That's right. Yeah, and we had a similar kind of idiosyncratic move in oil, where we had the oil report yesterday, and then oil sells off today. You know, just kind of an odd move. The other thing I thought was interesting about the sell-off yesterday on bonds is it was a little later. I mean, it was all day, to your point, but, you know, typically we may have expected just to get hammered at the open. It wasn't as down at the open.
It wasn't.
As you would have expected looking back, given where we ended up. It was really that mid-morning move on the U.S. Open, and then, you know, it just cratered, just totally collapsed from there. But, you know, it was hanging in there in the morning and then just fell apart.
It was. I just put it up, and you'll see, folks, it was just like a little razor blade, and then all of a sudden that razor blade turned into like a bigger razor blade. And, you know,
right.
That was the thing. It's hey, you know, we'll see where the whole baby shakes out. What's going to be interesting is that you know, I was talking about, Jason, that the one thing that can make bonds go topside again is a market that's going downtown. So it's going to be really interesting here to see where this shakes out. Now, what I did do is I brought up, you know, a longer bond chart, right?
Right.
And I'm almost thinking, you know, we're at 117, and when I look at this on a longer basis now, it's like, you know what, we did break down. So it's like, okay, are we going to have a range now between the 118 and, you know, basically down there at 114? Because, you know, we traded there for a long period of time from 2008 going over the 2010, almost 2011.
That's right.
You know? And
yeah.
I guess market-wise, what happens, folks, is this. Fast moves in anything, which we've just had, throws dislocations into markets. If, in fact, we're going to be in another trading range, it's not the end of the world if we're going to be in this trading range for 2 or 3 years. You know what I mean? It just take a while. So.
Yeah, but we haven't been here for a while either. But, yeah, looking back historically, I mean, you know, 320 on the 10-year is, you know, I mean, not the end of the world. But where we've been, it's, I mean, we were below 2 not that long ago.
Oh, listen, I think I said to you yesterday, I was looking at a couple of my mortgages. I have one mortgage on an investment deal that is a 2.85. Right?
That's right.
It's like, I'll never sell that, man. It's like, you know what I mean? It's like, you're going to be kidding me. And, you know, you forget, folks, I mean, that was a long time ago that I did it. But even so, I forgot that mortgage rates were even that low. You know what I mean? It's like, wow, man, you know. So. Yeah. It's going to be wild watching this thing shake out. I mean, there's no doubt. And I guess the real question is going to be, you know, we're down here. You got big volume on the way down.
Right.
And are we going to be in a correction, you know? And, you know, what's so funny, Jason, is that everything is running so good, folks, that this is the ultimate. And, you know, we've heard in the last couple of weeks, of course, that, you know, even with Powell, that, oh, listen, everything's roses. We're going to, you know, everything's great. Everything's going to keep going. And it's like, oh, my God. And actually, Howard Marks, who is a great, you know, investor. You see that little article he had yesterday?
Yeah, absolutely, man. Loved it, you know?
Yeah.
With too much money going into too few trades.
Right. And what he was talking about, folks, that, you know, that whole deal about it's different this time, don't ever pay attention to that, because that is the most, those are the most dangerous words in the vocabulary for the stock market, man.
Absolutely, man. Yeah. Absolutely. Yeah, we'll see. But yeah, I loved Howard's comments yesterday, and you know, certainly it's bloody in equities today. I do think this is a more serious than a one-day deal. To your point, something's still got to break, you know, with yields. I mean, clearly we've corrected off of the sharp move yesterday, but if this is truly a response to yields, there's more to come, because the move in yields was so sharp, and it would just be a reset on the current pattern. So we'll see. I mean, the yields too. I mean, you know, you got the global situation, you know, EM under pressure again today. That's building in the background. Obviously, that would potentially bring yields in. You know, I mean, I feel like we say this, you know, once a week, but there's so much going on between Brexit, you know, Euro issues with Italy, China, the trade war. But then the U.S. data, you know, to Powell's point a little bit, is fabulous, you know, in some respects, right? You know, we're over 3. You know, we're gonna have a great NFP probably tomorrow. You know, it's really an interesting market.
Well, here it is the point here, folks. I think the economy is going forward, and it's still going to go forward, but that has nothing to do with the stock correction. I mean, I can tell. I can tell you, 1994. Okay. It was a vicious correction. Now, if you go look back, it doesn't look like a lot, but this is what it was. It was 15%, 15 to 18%. It was in 6 weeks, but this is what ended up happening. Everyone was so over-leveraged, right, that people, I mean, we go out to a bar, people were freaking out, man. Do you know what I mean? And they were freaking out because they had been over-leveraged in the stock market. So a 15 to 18% correction in a 6-week period was big money, because guess what? It wasn't that amount of money if you're leveraged by 1 or 2x. You know what I mean? So
that's right.
It's, you know, it's interesting. What I just put up here, Jason, is that Comcast, folks, right? If you just want to see like what happens when, you know, you get a run on interest rates just a little, Comcast saved $28 million on their bond issue, because they priced it on Tuesday versus yesterday. $28 million. Now that was
those are smart guys.
Isn't that cool?
That's awesome, man. Good for those guys. A couple of good Philly guys out there pricing bonds, saving $28 million, man. That's awesome. It's amazing, though. Yeah, I mean, the move yesterday is hard to exaggerate.
You know what? This gets even better, folks. Okay, because I didn't realize it. That's to be exact, this is saying 27.8 million a year. Never, not on the whole issue, a year, folks. A year, because it's a 30, well, let's see, did they say how much? It's a $38 billion transaction. I don't know how much they floated, but that's a year. That's making money, man.
Serious, man.
Yeah,
I mean, it was a Titanic situation yesterday, and to your point, we'll see how it shakes out. But yeah, to me, the concern is longer term. If this was simple, in that Jeffrey Gundlach talks about how this is a very interesting time because we're issuing more debt. It's inflationary while rates are rising. We've never really had that phenomenon in a late cycle economy, and if that's the situation and the equity market's responding simply to the higher yields, and we're issuing more debt, overwhelming supply, this could be a back down.
Stay right there. We're going to talk about this. Jason and I are coming right back, folks. The commercial, check his newsletter out. Get his newsletter, TFNN.com, Quantitative Edge. Jason and I are coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now trading down 254. You get the NASDAQ off 162. S&Ps are off 32. Talking with our man, Mr. Jason Path. We are talking markets. We're talking bonds. We're talking the U.S. debt. And, you know, you bring up a great point, man, with this U.S. debt, because our debt has never been so high, and in a raising environment, it's like, okay, man, like, how are we going to do this, right?
Yeah, we're issuing more paper, when, again, there's challenge conditions globally. The Chinese have backed off treasury purchases. There's less, it seems like there'd be less demand at a very, large level, those large purchases purchasers like China. To your point, if the market just would, equities were to go way down and stay down, clearly that would help demand. But in the short term, if there's less demand, more issuance, and it's just a true supply-demand issue, and that's what caused the move we saw yesterday. That's going to be a pervasive issue. It's going to take some time. It would take a steep correction in stocks to reconcile that. And but yeah, at a larger macro level, we've got raising rates, issuing more debt than we ever have, pretty late in the cycle. We can speculate on what that means. We've never really been there, but it doesn't seem like it's sound. Not to make a political comment, but there's some challenges there that we can enumerate that clearly markets are going to have to work their way through.
Well, we thought there were challenges. Listen, the Tea Party folks came to being over 10 years ago when they thought there was challenges with the debt structure that is probably half of what we have now. So you can imagine. I mean, seriously, right? I mean, that's a reality. The thing that's going to be interesting here, man, is that the push and pull between the debt market and the equity market, we're going to see this really start to basically, evolve as to, because, we really don't know. I mean, I guess the theory would be that the economy's going gangbusters, which it is. So more tax revenue would come in, but we just got the tax cut. So, the economy really, I'm not sure whether the makeup on that is going to make up for the tax. And we'll find out pretty quickly, I think, right?
Yeah, absolutely. Yeah. And with respect to markets, I mean, I'm the one always saying, there's always a buyer for U.S. dollars and, long duration debt. But I mean, at the level of supply we are now putting out, it could just be a simple repricing. And we're moving to that would, a fair value there. If it's truly deterioration in demand and it looks like it's trending the way it is, it looks like 350 might be the next checkpoint,
Right. And we'll just have to get used to it. And, if it goes, let's see, 350, man. Oh, my God.
On the 10-year, yeah. I mean, we'll see. But, I mean, that's one of the interesting things is there's not really a consensus on what happened yesterday, right? Clearly, people have speculation. I could speculate. You could speculate. But with such a sharp move, what was the catalyst? Like, what happened?
Exactly.
We didn't go 310 to 315 because, risk, was on.
Right.
We went, like lights out, and I don't know really anybody's nailed down the catalyst. And if it's we are just overwhelming demand with new levels of supply. We talked a couple of months ago with the pension plan piece. Those folks were stepping back as of end of September because of the tax changes. They lost the tax benefit to buying long duration debt. So if the corporates have stepped back, China's stepped back, and we're putting $1 trillion of debt out to finance the new level of deficit, and that's if that's truly what is beginning to overwhelm demand, we're going to push much higher into the threes on the 10-year.
Yeah,
and that's going to be significant for equities.
It is, and listen, folks, here I'm going to show you something here. This was pretty wild. Watch this, for Jason too. So yesterday at the close, right? And the NYSE, we went from 839 to 907 on volume, right? And now that wasn't extensive, but in the NASDAQ, it was extensive, folks. When I was doing the newsletter last night, I'm saying to myself, hold it, man. We did 3 billion shares in the NASDAQ. So, that runs, folks, like 2.2, 2.3 every day. And what happened is right at the close, man, they unloaded. The thing that's amazing is that someone was on the other side and bought it, because it wasn't down much. But that is always a heads up. You know what I mean? It's like, okay, man, And the reason I'm bringing it up is the aspect the same with the bond. Like, okay, what's going on there? Because I was saying, what the heck is going on in the two indices? Because I've been doing this forever. You see that happen once in a while, but I'm talking about once every 5-6 years. That out of nowhere, it's not an option expiration. Do you know what I'm saying?
Right.
It's not a bad down day. It wasn't a bad down day. The volume will explode today, folks, but it's a bad down day. That volume exploded at the close yesterday. So that was a large fund getting out, and some other fund was just sitting there saying, oh, yeah, I'll buy it, I'll buy it. And when they gave it to them, man.
Right.
So.
Yeah. And again, we'll, be obviously an interesting day tomorrow with NFPs and the close of the week.
Yeah.
But, you know, this could be pushing lower for a few more sessions for sure.
You gotta love it. This is why we're all in the market, folks. It's a mystery to be lived, not a problem to be solved, man. You gotta love it, man. I'm telling you.
That's right, man.
Okay, well, listen, man, it's always a pleasure. You get an outstanding newsletter. Love reading it. And folks, the way you get the Jason's newsletter, just go over to our website at TFNN. You can see under featured content, the quantitative edge. If you want the full data, nice backup behind it, lots of great trades, awesome newsletter.
Thanks, man.
You have a great night, safe night, man. We look forward to the show tomorrow.
Can't wait, man.
Cooking, brother. Have a great one. Dow Industrials right now, folks, down 268. We get the NASDAQ off 140. S&Ps are off 32. Bottom line is that you're going to see some big volume coming out of this market today. Thus far on the NYSE, it's shot. It's only 512. They'll lay into this at the close. And the NASDAQ composite, you're at 2.7. So the composite's going to end up doing a good 3 point. Yeah, well, it's going to be 3.2 probably. Big numbers. We take a look at some of the higher volume equities out here. Let's see what we got. You get Advanced Micro down 83 cents. We got Micron Tech off a $1.16. Intel's down 76 cents. The big dogs out here inside the NDX 100, the strength versus the weakness. This is what you have. You have INCY down 5.6%. Tesla's off 5%. Big numbers. Tesla's down $15, $279. You get Align Technology is off 5%, $19. You get Mercado Libre down 5%. These are 5% moves. And actually, if I bring up the NASDAQ 100 in general, what you're going to see is that big numbers. Google's down $40. You get Amazon down 48. You get Priceline down 33. Netflix is down 15. Illumina's down 15. Regeneron's down 12. Biogen's down 10. IDEX is down 9. And, you know, I was just talking about yesterday, folks, is that when the NASDAQ goes south, that can go south like in a heartbeat, and that's exactly what we got out here today. It was a one-way route. I mean, when you look at this yesterday, the NQs yesterday were at 77.01. Yeah, 77. 77.01, and right now you're at 74.88. So that NASDAQ blows my mind, man. I mean, it can stay up until it wants to unload. And when the NASDAQ unloads, well, here you go. The NASDAQ, in 6.5 hours, the NASDAQ just went back till July 20th. How's that for unloading? Yeah. That elevator, folks, has no stops on the way down. Stay right there, folks. Come right back. Our phone number is 877-927-6648. Be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Let's go take a look at a couple of these big dogs here. So this is going to get interesting, too. So Amazon, folks, Amazon's trading down 47 bucks here at 19.05. You get a little, the swing point out here that's going after is 18.65. Now, what Amazon did announce out here today, too, this is going to be wild watching this thing shake out. Amazon is starting they're taking applications right now for an accelerated program that's designed to create more brands sold exclusively on its website. Manufacturers can sign up to make products that become part of Amazon's own collection of private brands. Amazon Accelerator creates new opportunities for manufacturers and offers a way for them to launch brands and products directly to Amazon customers. This is going to be a big deal, folks, okay? All you young folks that are out there, old folks, all of the above, you have any ideas, man, I'm telling you, Amazon is really easy to deal with. This is a big deal, because what this specifically is that they're going to have their own brands. And the real kicker is that, okay, if you have something that you think you can move out there, they get the distribution. That's what it comes down to. You know, I don't know what the profit is going to be out there, but the bottom line is that there's going to be plenty of money made in that whole deal. Constellation Brands. Okay, so this baby here. So I'm going to show you the difference. This is pretty amazing. So Constellation Brands, they're up $11.32 in a bad market. They come out with numbers this morning, good numbers. Now here's how the numbers go. Let's see. Let's get them. Okay, here they are. So the sales estimate had been $2.25 billion. They came out with $2.330. Their that's second quarter comp. Okay. Revenue, where's the revenue? Let's see. Okay, revenue, let me get this right here. Revenue, they did $2.3 billion. Now, the differential here is a couple. Now, Constellation Brands, folks, are the ones that took a big piece of Canopy, okay? And, okay, so what does this say? Canopy growth will build and acquire global assets according to Constellation. Constellation says, okay, so Canopy growth will build and acquire global assets according to Constellation Brands' second quarter earnings call. Constellation says investment in Canopy was premised on existing markets. Says it hasn't counted the U.S. in its projections, expects a decriminalization of the pot business in the United States, sees no evidence of alcohol cannibalism from pot, says Canopy investment was not a defensive move, sees Farm Bill passage boost CBDs, the non-psychoactive ingredient inside marijuana. Says Canopy is one of the largest CBD producers globally. So what you have here is this. When they bought Canopy, now if I go over to Canopy, they've already made a fortune on Canopy, folks. They were a first mover in the whole deal. They bought Canopy somewhere down to like $24. So you're at 48. So they already got a double. Now let me show you something else. Okay, so that's Constellation Brands. Constellation wants higher price. Bottom line, they're in the business. Yesterday, and this is what they're going to be talking about this in the Pepsi boardroom ASAP, because yesterday what you had is Pepsi come out with numbers, great numbers. Bottom line, you know, they make a fortune. They took in $16.5 billion. They're not really in a growth business. You know, actually, when you look at their business model, Latin America is contracting by almost 3% a year. Europe is internationally is contracting by 2% a year. Their Frito-Lay business, because it's so big and they make so much money on it, is going up 1% a year. But it's a check this out, folks. A chip business that we all love. I mean, whatever chemicals they put in those Doritos, forget it. You know, you eat a Dorito and you have to eat the whole bag. Bottom line, it's a $15.8 billion business. Okay, that being said, though, this is what you had. When the CFO got asked, are they going to get into the cannabis business, bottom line, the stock, he said no, and the stock went from $111 to $107. These companies, folks, they're going to be in it. They have to be in it. That's the bottom line, because it's going to be part of the regular chain, and you're either going to be part of it or you're not going to be part of it. It doesn't mean they're going to give up what they have, but these food conglomerates, I suspect, are going to be in it, as is the booze conglomerates. That's just how it shakes out. And I suspect it's going to be bigger than most folks think it's going to be. And with that said, however, though, guess what? Like, if we go, these stocks are going to get killed. These Tilray, there's no way that these stocks are worth what they're trading for right now. The Canopy's different ballgame. Tilray, bottom line, market cap of $13.5 billion, down $10. You're at 145. They take in $10 billion in a quarter. No way. $9.7 million. Not going to happen. Not going to happen. There's no way. And what Tilray did yesterday, they're smart, man. There's no doubt they're smart. They're floating a $400 million convertible bond. They'll price it. It's not priced yet, you know, so we don't know what the conversion rate is at. But they're going out there and they're going to get money. So you have two different things here. Now, check this out. This is what's going to be so wild, is that you're going to have the equity. But now what you're going to have a debt structure that's a monster. Because, so check it out. I would love to float a bond of $400 million. This company takes in $9 million in a quarter. And guess what? The bond's going to be sold. And, you know, it's going to get eaten up in a second. But guess what? Now they're going to pay it back. And they're going to pay that back before the fact of the aspect of trying to make money. And yes, no, there's no doubt that, you know, Canada's going on the of being legal, but there's 33 million people in Canada. Okay, let me see how many right now. Population of Canada. So, population of Canada, yeah, 36 million people. Bottom line, folks, listen, I think it's going to be a great business, but just like anything else, what is the value that you're paying for the return that's coming in? You know, I'd say that this is probably going to be sell the news when it does become legal, because what I don't see is I don't see how, and we'll find out real quick, how a Tilray can go from taking in, so this is the number that they're giving the street right now and giving all of us. They're saying that they're going to go from 41 million this year to 155 million next year. Just don't see it. Just don't see it. So if we really start breaking this down, if I actually had more, if really start breaking this down, it'd be pretty cool. doing that by 36 million people as to how much each person would have to spend. Yeah, it's pretty easy, actually, right? Yeah, I'm gonna do it right now. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is up. No, it's down, rather. 180. You get the NASDAQ off 139. S&Ps are off 23. And, you know, on the Dow, that's not a bad showing, actually, for where we were. If we take a look at this Dow Industrials, what you're going to see here is that the Dow hit a low out here today of 26,471. And you're off that low by 150 points. Right now, we're down 184. Volume is a whole different ballgame. Bottom line is that you're going to be down at these lows because you're hitting the lows with monster volume. We've done 93 million inside the SPY. And, you know, bottom line, that's after doing 100 million at the high. And what you'll see is that when we come into this close, they will throw another 20 million more than likely into this. And then we already had tested that high with 64 million. Tested it yesterday. Now you're down at 93. Inside the small caps, same type of setup. The volume's going to be in all of them. Small caps out here. Come on, baby. Where is she? There you go. So 24 million, and they'll throw a bunch of volume. Actually, the small caps are going to probably do about 28 million. They broke the swing point that had 20 million. took that apart. They're going after the swing at 162.26. We haven't hit it yet. That's 26 million. It's going to do all of 26 million. So you're barreling into a major swing point with volume coming into a Friday. So what you are also going to have on the weeklies, you're going to have a high volume low that's sticking out there. That's how this baby is shaking out. We go take a look at the some of the big dogs out here, the bigger volume ones, you know, the ones that basically sticking out. Let me go see where Facebook is. Facebook just hasn't been able to. Yeah, that's making its way. We're still $10 off the 149, where I suspect we're going, but we're 158 right now. You're down $3.50. Now the volume on Facebook's not that much. Well, we'll see what they throw in at the end. They will throw in lots of volume at the end of the trading day today, folks, which is in 4 minutes. Stay right there. We're going to be coming back with numbers after the close. We have the Dow Industrials right now down 199. Nasdaq is up 145. S&P's down 26. We'll come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Get our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. So make it a great night, folks. Don't make assumptions. Learn to ask questions. It's always better to ask questions than make assumptions. Have the courage to ask questions and to be as clear as you can be. Once you hear the answer to the question, you won't have to make the assumption because you will know the truth. Market-wise, let's take a look at it out here. We had the Dow Industrials close down 200. Nasdaq off 145. S&P's off 23. Percentage-wise out here, folks, you had the Dow Industrials down 0.7. Nasdaq off 8. S&P's off 8. Nasdaq down 1.8%. Gold contract flat, $1,203.30. Silver down 6 cents, $14.61. Light sweet crude. Now it's going to get interesting here. We'll see where this light sweet crude market wants to go, because what we had out here, I'm going to put this on the continuous contract so you can see how this is shaking out. On the continuous contract, we bring this back, and what you're going to see is that we CL1. Second, there we go. Bring this back 10 years, and what you're going to see is that when we overtook the swings that we're trying to get over for 5 months, we overtook them. we were coming into, when we came into, the lows of the highs of 2011. Now, the lows of those highs is $75.71. That was in August of 2013 and September of 2013, October of 2013, same number, and then going over to June of 2011, and 2012, and then $77.22. Now, what we did is this. You got up into those, and you gave it up. So it's going to be pretty cool here to see, can you come off this level with volume on the way down? Because if that's what you got, bottom line, that might be the end of this move higher. If we push into this bar, we pushed into this bar by $1.50. Now, the bottom of that bar is 75.71. The top is 98. You push into this bar a few more dollars, then my take would be that, yeah, you get $90 gain. Thus far, though, it failed, and it failed pretty quickly. If we close under the $75.27 this week, which is only tomorrow, then the setup is that you will go back down to $64. The reason being is that we got over the high of 3 weeks ago. You're going to close under it. If that's what you got, then it's going to be a consolidation with the lows of 65, the highs of 75, and that's, by the way, that's where we've been now for basically 5 months. Let's go take a look at the unleaded gasoline as well as the heating oil. So unleaded gas, that was down 3.5 pennies. That baby, let's see, XB1, I'm going to do this too, XB. We're going to bring this on a continuous contract. Take a look at how this is set up. Yeah, this is a different ball game. This didn't get up to the highs of 215. So this says it can go down to 192. Now, heating oil is different. Heating oil actually had the biggest expansion. So let's see what heating oil has done. Heating oil, HO1. Okay, so HO1. Heating oil was down 3.5 cents today. We take a look at this. We'll put this on a 10-year also. Yeah, see, the heating oil, what says it was 251? Well, we got to 245. Well, heating oil has to close under 236 in order to back off. Right now, you're at 240. But big move today in oil, and we'll see whether they get any follow-through on the downside tomorrow. Notes and bonds, bottom line, I'm going to do the same, but I'm going to go with the continuous contract and the 10-year note, because what we have here, 10-year note out here went to low 117.19, had a high of 118 today. Now, it did reject lower price. You had 2.6 million contracts traded. Now, what I suspect we're going to have here, though, is this. The note and bond market right now are trading back into the 2008 to 2010 levels. And I suspect, actually, that's how we're going to end up in the next few years. That's how it's looking. And the top of that is approximately 118. The bottom of that is about 114. Now, it does look like what we're going to do here from today till tomorrow is maybe do a little bounce in the bonds. And if that's what we get, what that would mean, and there's no doubt that this is how this works, is that the market would be going lower again tomorrow. And the aspect of, we had the downdraft in the market because the note and bond market went so quick downtown, rates went so fast uptown. Market sells off. The way that the bond market is reacting today, it looks like it wants to bounce. If that's the case, I suspect what we're going to get, no matter what the job number is, I'm sure it's going to be a great job number, but guess what? A great job number means that the market's going to freak again because they're going to realize that rates are going to continue going up. That happens, you're going to see more red in the S&Ps, the NASDAQ, the Dow Industrials. That makes the bond market bounce. But I think the way that this actually broke down, we're going to be in a different level. Now, let's watch this. I want to show you this. I'm going to put this up on the 30 because the 30, I'm going to set this up and then we're going to go to a break and then we're going to bisect and dissect the 30 because the bond market itself, folks, this is the largest bull market in history. And when you actually look at this, I can take this back to 1980. That was the beginning of the bull market in bonds. And what we're going to bisect and dissect is that where would it have to go to break that bull market that we've been in, you know? And we'll basically go through these charts and take a look at it. It's pretty amazing when you go back. You know, if I go back to 1981, September of 1981, for a 30-year bond, you were paying 55 cents. That paid 14.5% from the U.S. Treasury. Check that out. And, of course, what we did, we went from 14.5% all the way down to almost 1% in September of 2016, maybe 1.5%, whatever that was. And then, of course, from that point on, you've been going up. So stay right there. We're going to bisect and dissect that good old 30 years as soon as we come back. Dow Industrials finished down a couple $100. You had the NASDAQ off 145. S&P's down 23. We're coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. 877-927-6648. So we're talking bonds, and what I have right now is I have a 30-year bond up. That baby is back to basically I got it back to 1975 right now. So it's the bull market started in 1980, September 1980. That's when bonds 14.5%. You were buying treasuries at 55 cents on the dollar. Hard to believe, right? Paying 14.5%. Bottom line is that you can see that the long-term trend is a monster. And this wouldn't be broken until the 30-year got down to approximately, we're at 138. We're talking about 132. You know, 132 right now. You break that, and then it's going to be like, okay, baby, you got to get some big action, because we certainly we've stayed at these levels for long periods of time. If I look at I don't know if I can do this on the 10-year. Let me see if I can do this on the 10-year is a different setup, by the way, anyway. But let's see. So I'll do 10-year generic. No, TY1. Okay, so I get the 10-year. Put this back. Okay, I can do it here too. Let's see. Okay, so I take the 10-year. Looks like the 10-year might have already broke, actually. Ooh, look at this, yeah. So this is interesting. Is it the same time frame? Oh no, I got to bring it back further. Interesting. Okay, 1 second. Hold it. Why? Oh, interesting. It won't go back further. I know they had 10-year notes in 1980. And 1 second. Let me close this one. See if I can get it on that one. Yeah. Either way, now this is pretty intense, because what the 10-year has done, it just broke. Now, it just broke the trend line that brings you all the way back to a 10-year of 70. I get that to 84, folks. That's all I have. The thing that's intriguing, though, this is not broken with conviction, and that makes a big difference. When you're breaking trend lines, a break that normally stays down there is a break with conviction. That's wide price spread, accelerated volume. I do expect, though, that 10-year that with that 117 looks to me like we're going to be in a new trading range. You know, you get a bounce out of here, going to be a new trading range somewhere about the 115 level, and that would make sense too, because if we go over what the market has not paid attention to at all until yesterday, is that the short-term rates, okay, bank-to-bank rate. Now, so watch how wild this is, folks. The bank-to-bank rate, this is an overnight rate. Right now, the effective rate last night was 2.18. So when we hear the Federal Reserve, when they're saying they're putting short-term rates up, right, they put them in between 2 to 2.5, 2.5 to 5, 2.5 to 2.75. That's how they, and then it's up to the negotiation at night, okay, how much the banks are going to pay. Well, last night they were paying 2.18. That's what they were paying. The next meeting is going to be on November 8th. The probability is only 2% they're going to go up on rates. The probability in December 19th, however, is 77%. So I expect you're going to see that. What we're going to start seeing is where the kick-in is going to be in 2019. Then that's going to be like, okay, where are we going in 2019? Right now, the gin, let's see. So 2.25, no, it's going to be 2.5 to 2.75. Okay, so right now, you have the March meeting. So when we go into 2019, you have a meeting in January 30th. That meeting has a 5% chance of going up. So it looks at this point that we go up 25 basis points in December. Right now, March has a 55% chance. Now, that more than likely will go up. And just those two rate hikes there are going to bring you to 2.5 to 2.75. And when we start taking a look at this curve, what you're going to see, of course, is that, you know, the 10-year is at 3.1. So if you're at 2.75 on an overnight rate, well, it makes sense that this 10-year is going to start moving. You know, that's where we're at. Let's go take a look at Costco. Costco just come out with numbers. Thanks, Dave. Costco closed at $231. The low for the year is $154. The high is $245. Right now, you're trading $223. That's down $8. That's interesting, too, because that's going to break a swing point. That's going to break the 231, 231.51. It's going to be an ABC down. Interesting. So your 8-point on that is 245. Your B is 231. You get $14. Your C's 37, 27, 23. But I think it's trading at 23 right now, isn't it? So it's, yeah, it is trading at 23. So you get an ABC down, but it's trading at that ABC down right now. Let's see what they have to say. So their earnings per share, well, the revenue estimate was $44.34 billion. They made $44.41 billion. Earnings per share, $2.36. They made $2.36. So they got what they needed out of that. Okay, Costco reported fourth quarter that matched the analyst estimates. Comp sales. Comp sales estimate was 7.2%. They did 7.2%. That's a nice comp sale, man. That's a, you know, you can grow by 7.2%. That is one big number. Let's see, the company comp sales, this is even better. The company comp sales, including gas currency, is 9.5%. That's a beauty. Listen to this. Wow, man. In the fourth quarter, folks, man, they took in, that's hard to comprehend, membership fees of $997 million. $997 million in membership fees. That's incredible, man. That is one huge number. Well, I guess, you know, I guess when you're dealing with a company that takes in 33, well, they took in $44 billion. That's, I guess, 100 million. No, 900 million. It's almost almost took $1 billion in fees, and then on top of that, of course, bottom line, they're pushing out some product. Now, this is intriguing for a large box store. Look at the amount of growth that they have. This is pretty amazing, man. In 2014, they took in $112 billion. This year, they took in $141 billion. They're growing the warehouse clubs by approximately 1.5% a year. Membership fees are going up by 1.5% a year. In the United States, they're growing by 1.5% a year. Canada, they're growing by about 0.3%, about 0.4. Internationally, they're growing about 1.2%. Stay right there, folks. Come right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Elon Musk, folks, you just can't keep the guy under control, man. I mean, this is, you know, this is just like the Groundhog Day, man. So check this out. So Tesla closed down $12.50. It's trading out at $281. Now it's trading down another $7 at $274. And what's happening is that Elon Musk is out here tweeting again. Let me see if I can get this in front of me. This is like crazy, man. He's tweeting about the judge that has to say whether the settlement's going to go through. Let me see. Okay, so you'll at least get a month back there of 149. Okay, so he just tweeted out. Look at it exactly, but I think it's going to be a month. And what I might do, Adeline, is I might just cancel. Okay, so let's see. The short seller enrichment commission is SEC. So watch this. I got to put this up. Oh my God, I see what he did. No, he's crazy, man. Okay, so check the SEC is going to go out of their mind, but that's their problem. So watch this. He's got a new name for the SEC, folks. It's the Short Seller Enrichment Commission, SEC. The Short Seller Enrichment Commission is doing incredible work, and the name change is so on point, said Tesla CEO Elon Musk. He just did this a few minutes ago. Oh, man. You know, hey, listen, we'll see where this shakes out, but that's pretty intense, man. The thing, you know, the thing that's crazy here, folks, is this. So picture this. Let's pull this up for a second. I got to see this. So you're talking about, how do we do this? That's easy. Let's see. So $6. Yeah, 600 million. So 6, 7 to 42. Yeah, so that one tweet just cost the shareholders an additional $1.2 billion. That's going to be the problem. That's the real problem here, you know. He wants to fight with the SEC. Guess what? It's a losing fight, man. The bottom line, you're a public company, and you want to be a private company, you don't have to worry about that stuff. A public company, folks, bottom line is that the SEC is there, and they're there so that they can take care of what, in a way, investors. They wouldn't take care of investors' money because they're not there. They're not there to make or lose money for investors. What they're there for is that to keep the regulations in the playing field supposedly on a flat field. Now, what Musk is saying, and, you know, bottom line is that what he's saying when he's looking at that, the Short Seller Enrichment Commission, you know, he has a point, because this is what does happen, and it's just not the SEC, it's the NASDAQ. that they've never been able to get a handle on. And this goes back to, I'm going back even 25 years now. And what it is this, is that short selling, it's not legitimate short selling. So legitimate short selling goes like this. Legitimate short selling is that you have a stock, your broker-dealer is allowing you to sell the stock, you know, let's say just the Qs, okay, if we do the Qs or anything else, right? Bottom line, you can buy and sell them like nothing, no big deal, okay? Okay, so now let's go to a Tesla of the world or something like this, though. So a Tesla of the world, bottom line is that you have a 26% short position. Well, what happens is that there's certain broker-dealers that specialize in lending the shares of equities that people like to short. Now, this is how it works. There's premiums in certain stocks because when the short position gets too high, the broker-dealer is basically paying the person that owns the shares the right to sell the shares, so they're charging a premium. That's not even the issue. This is how this works. The issue goes like this, is that when a stock is getting called in, the broker-dealer will call the person who has the stock. 'Cause I've done this a million times, okay? And I used to do it really a lot because I had a relationship with one of the largest lenders of short positions. And so what happens is that you get, let's say I get 10,000 shares. You short the shares. Under that agreement, they can call those shares back anytime they want. Now, what happens is this. When they call them back, everyone that has them knows that the calls are going out and you get them back. Okay, so watch how this goes, though. The call goes out at 10 o'clock in the morning. You got to get the shares back by 1:30. When we were doing it, I'm going back like 15 years now. When I was doing it there, what ended up happening, you'd have to get the shares back by about 1:30. 2 o'clock was the cutoff date. So you had to buy them back. But you never waited that long because what you knew right off the bat is that, number one, that everyone else was getting the call at the same time because they'd tell you. I mean, bottom line, I'd say, hey, you know, is this call going out? Yeah, the call's going out, Tom. We need this many shares back. Great. All of a sudden, you're going to buy in. Okay, so watch what happens. You buy in, right? Stocks probably takes a bounce. Some people don't buy in. Some people don't return the shares. Now, what happens if you don't return the shares? What's going to happen is that, let's say one broker-dealer has 1 million shares out. They're calling in more than likely the 1 million shares. They only need 500,000. So what happens there is that the people that close the position, okay, now they have the shares back. You can call them back at 3:30 in the afternoon after the deal. You get any more shares? Yeah, I get shares now again. It starts all over again. That way there is totally above board. That's how it's supposed to work. Okay, now let me show you the one that doesn't work. That is prevalent too. Well, still, it's negative shorting. What negative shorting is that the trader, the fund, would have a broker-dealer, and the broker-dealer will lend the shares. Bottom line, the broker-dealer is not under the same rules as the fund. The broker-dealer is supposed to be calling the shares in. Bottom line, don't call the shares in. It's a naked short position. And you can go to the NASDAQ, folks, and they'll show you the amount of shots that's supposed to get called back in, and they're in violation. And the list is huge, okay? Bottom line, they really just don't enforce it. And that's what Elon Musk is talking about. That's his problem with the new name of the SEC. I gotta get this. The Short Seller Enrichment Commission. They're gonna go out of their mind because this is a great name. There's no doubt. Because what he's saying, of course, is that you shouldn't be able to short positions, and you shouldn't, okay? Because that's dangerous for the companies. You shouldn't be able to short shares that you absolutely don't have. That's, you know, because guess what? If you can do that, you could just keep selling all day long, and the stock would have to go down, but you're selling something you don't have. Whereas when a true short position is that you actually have the shares to short the shares, so that has to do with the aspect of the float. But that being said, bottom line, he's picking a fight with the wrong deal, and you think that he'd already understand that after he said no to making the deal. Next day, the stock tanks, and then he made the deal. Dow finished down 200, NASDAQ off 145, S&P's down 24. Notes and bonds, the 10-year note down 6 ticks, 30-year bond off 13. Job numbers tomorrow, folks. Going to get some action. Stay right there. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Let's go take a look at some of the higher... Well, actually, let's go take a look at the financials out here first. Let's go to J.P. Morgan, JPM. So financials out here, J.P. Morgan today was up $1.03, trading at 115 in a bad market. Not enough volume. Interesting. Okay. XLF, because the financials, you know, bottom line, should be able to make more money, because what you have here, folks, is that the yield curve steepened. You know, you've heard a lot about the yield curve flattening. Well, when the bonds went south, the yield curve steepened in a big way. What that specifically means is that you didn't have you had your short-term rates go up quicker than your long-term rates. And bottom line is that no, actually, they all went up. And actually they all went up, because that would have actually flattened them. They actually did steepen. So I'll give you an idea of the 10-year. The 10-year right now is 3.183. So use the last numbers, the 83 there, and then the 30-year, you're at well, you got 3.343. So it's 3.3. It's 343 minus the 3.183. That's how those babies. So the yield curve actually steepened. I can show you right here. Yeah, I don't have it in a chart setting. But bottom line is steepened. So when it does steepen, the bottom line is that the bank should be able to make a lot more money. Bank of America, BAC. Let's go take a look at Bank of America. Bank of America. Yeah, they all did a bounce, but the bottom line is that that's about all it looks like at this particular point is a bounce. Cryptos. Okay, let's go look at Bitcoin for a second. We haven't looked at Bitcoin for a while. The reason we're going to look at Bitcoin is that Bitcoin right now trading $65, 65.44, 6,544 XBT. We take a look at this. Okay, so there's not much action there. In the fundamental aspect of it, Coinbase, which is one of the largest cryptocurrency exchanges, said Adam White, who was heading the institutional platform group, and its 5th employees leaving the company. White's exit comes at a pivotal time for the San Francisco-based startup as it seeks to lock in large clients like hedge funds and other institutional customers after becoming a leading exchange for retail investors. He most recently was the vice president and general manager of institutional business. While we're extremely sad to see him go, we're confident in the group's ability to keep executing on the vision that he laid out to be the most trusted venue for institutional investors and to trade cryptocurrencies. Yesterday, the firm announced that Jonathan Kellner, the former chief executive officer of Instinet, is joining as a managing director of the institutional business, taking over much of White's coverage. White joined Coinbase in 2013 when the founders were still working out of a one-bedroom apartment. Pretty amazing. And Bitcoin was trading around 200. The biggest cryptocurrency peaked at 20,000 in December. Recently, it's been trading 6,500. Over the last 5 years, Adams helped us build our exchange business into the largest base crypto trading revenue and was integral to growing Coinbase's global presence and scaling our culture to multiple offices. Prior to the working there, he was in the U.S. Air Force, consultant at Bain and Company, and he has an MBA from Harvard. This is saying quite a bit, you know. I mean, you got to put the smile on the face. There's no doubt about that. But that's going to say quite a bit about institutional business and Coinbase in general. The reason being, folks, okay, picture this. This is still all brand new. Coinbase is not a public company, and if they were growing exponentially, that guy would be staying there. We know just from the aspect of what has happened with cryptos in general. I mean, this is a major, major crash, I'd say. You know, bottom line is that you get expansion on the way up. We bring this back to 2017. You're at 1,300. 7 months later, you're at 19,000. 2 months later, you're at 5,000. Man, that's such a hit. Sick. And we've been there since. You know, the bottom line is that you had the monster move in the way up. In 1 month, amazing. In 1 month, folks, it went up $10,000. Went from 9,300 to 19,000. And then the next month, it went from 16,000 back to 9. The following month, you're back at 6,000. So in 2 months, it went from 19,500 to 5,900. And that's where it's staying out. You can see what is going to push it. And of course, what did happen is that the cannabis stocks took over the crypto stocks. And, when we take a look at these cannabis stocks, now the differential would be that at least they take something in. That being said, I expect what we're going to see is that these things are going to, not all of them, but some of them are going to implode for sure. You know, we had Tilray, which is I would say the bubble child. You know, Tilray's got a market cap of $13.5 billion. They're doing a convertible at $400 million. So what a convertible is that they're going to put an interest rate on it. They're going to put what price you can convert to the stock on it. They're not going to have a problem selling it. So it's a company that takes in $41 million in revenue, but yet the public's going to give them $400 million. And one of our tigers in the den, Kelly, you know, he's talking about it. It's so true. So watch. He was talking about, well, of course, you're going to use that. They're going to use that to buy the companies, right? Well, guess what, folks? If you're going to buy the companies at these bubble inflated prices, I think that's insane, because that's where it's at. So, you know, we'll see where the whole thing shakes out. You know, and when I say where it shakes out, you gotta separate the issue of these companies are going to make money and they're going to make good money. That being said, they're not going to, when you look at a market cap of $13 billion and you only take in 41 and you're just going to put another debt of $400 million, that's not real. That's not even close. That'd be like saying, let me see. It'd be like saying that I could go out right now and get about like 60 million and like, you know, revenue-wise, when you look at their revenue model, how are they going to pay it back? What they're hoping on a convertible is they would convert to a high stock price, and the stock price can stay up at that level, so you never have to pay back the debt. That's how this thing goes. And as to the aspect of buying other companies at these inflated prices, I think it's crazy. You know, and we're going to know pretty quickly. You know, we start doing the math. I did the math up in Canada. So Canada is 33 million people. You could do $10, right? That's 330 million. You know, that's if every person in Canada is going to spend $10, and I doubt every person in Canada is going to spend $10 on pot in a year. You know, maybe you'll have 10% of them spend $300. Stay right there, folks. Come right back. Dow Industrials went down on volume, NASDAQ on volume, S&Ps on volume, all of the above. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So let's go take a look at the volumes here. We get the jobs numbers tomorrow morning, folks. I expect you're going to have a good jobs number. Bottom line, with the the market reacted to fast interest rate rises yesterday. Started selling off yesterday, sold into it today. NASDAQ, big volume, 3.2 billion on the way down. NYSE did, I think, 900 million. Let me get that baby up. 837 million. Not bad, but fairly large. The ETF structures all came down with juice. We had the SPY. SPY traded down to a price point of 289, closed at 289.44. You did 110 million shares. You're right back. We were on the 27th of August. NDX 100, that baby, when that goes south, man, that goes south so quick. It's pretty amazing, actually. So the amazing part about this, the Qs, folks, picture, we're at October 4th, and in 6.5 hours today, the Qs came back to July 17th. That's how fast it was. It took everything out. So this is where this always gets dangerous, meaning that in one day, you just took out the trading of that length of time. Why? Because everyone's just buying up there. You get one more day like that, and bottom line, then you're going to be back into where we were in June. So big number. Small caps, the small caps led the way down. The small caps, bottom line, came back down again with volume, monster volume, 27 million shares. The small caps are back where we were trading in May 30th. That is already basically, we're at 163.64. You take out 162.26, and it's lights out. And the reason I'm saying it's lights out at that particular point, because what has not been tested, which is going to be tested, is that February 9th swing low. February 9th swing low is 142. The high of the low is 152. 152 is game right now. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow morning, 8:30. Jason Path, he'll get you going. Kickoff, morning market kickoff. Wow, look at him, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.